Hello everyone, welcome to Lineup Stocks. I'm Will. Today is Sunday, February 22nd. Let's talk about the weekend. I was celebrating the Chinese New Year back in China. Huge holiday, a beautiful time with family. That is why I took a few days off. But Friday was wild. The news was absolutely massive. We had the PCE data. We had the GDP data. It was loud. It was noisy. People were talking about it non-stop. But as a retail investor looking at the truth, I can tell you that wasn't the real story. The real story came from the Supreme Court. 6-3. They struck down the global tariffs. The moment this news hit, the market loved it. The index shot up. A massive, rapid spike right in the middle of the day. A beautiful, explosive rally. Nobody knows what Trump will do next. Nobody knows his next policy move. Nobody knows how big the impact will be down the road. So, we ignore the noise. We do not trade the headlines. We trade the charts. The technicals tell the absolute truth. Right now, the overall weekly trend is up. We are looking at a very normal pullback in a massive, beautiful uptrend. Look closely at the QQQ. It is very important. If the QQQ breaks below 593, it is going to fall hard. A massive, massive drop. I look at the chart, and there is nothing holding it up below that number. It is totally empty space. If it breaks the box we are in, it falls straight down to the weekly M60 line. The M60 is the only safety net. That is a 5% or 6% drop. A huge drop. It will wipe people out. I read the comments on the channel. A lot of people are panicking. They are turning into massive bears. They think the market is over. They are completely wrong. You do not short this market. It is a terrible idea to short unless the weekly trend actually breaks. Right now, it has not broken. Until that line breaks, the massive bear case is totally fake news. The Nasdaq is stuck in a box, just chopping around in a box. Out of all the indexes, the Nasdaq is acting the weakest. Very weak action. But because the big weekly trend is still up, we do not look for reasons to sell. We only look for buy points on the daily chart. We want to buy at the bottom of the box. We get in at a great price. If it breaks down, we get out. We cut our losses fast. Very, very fast. We protect our capital. But until it breaks, we treat this as a totally normal pullback. Nothing to fear. Now look at SPY. SPY is also in a box. The pullback is not over. The danger is still here. But the opportunity is huge. You can go long here. The weekly trend is a strong bull trend. The daily chart is finally stabilizing. You can buy or you can sit back and watch. But if you buy, you must use a stop loss. Protect your money. The trend could flip. We have seen bottoms before. This could be the last bottom before a huge breakdown. Set your stops. Make a clear plan. If you are protected, you can play the bounce safely. Finally, look at IWM, the Russell 2000, the small caps. They look incredible. Simply beautiful. The closing price was basically flat today, but you have to look at the chart since the big drop on February 12th. They tried to crush it on the 12th, but look what happened next. 5 straight days of strength. 5 solid days. Higher highs every single day. Higher closes every single day. The intraday action is wild. Up and down. Up and down. Very choppy. It is a massive wash. They are trying to shake people out. They are shaking out the weak hands. But ignore the intraday noise. Look at the closing prices. The closing prices are stepping up higher and higher day after day. IWM is the absolute strongest index out of all of them right now. It is showing massive relative strength. It is a beautiful, textbook uptrend on the daily chart. The only problem, the only slight issue, is it has not hit a brand new high yet. It needs to push through that ceiling. But the trend is completely intact. The trend is your friend. We wait for pullbacks, and we buy the dip. We do not chase. We buy the dip. Set your stops tight. Make your plan. Stick to the plan, and let the market do the heavy lifting. Let's look at Mew, I said many times. He is king of the Nasdaq now. Micron is flashing a major buy signal. If you're trading semis, you need to see these charts. Let's dive in. Looking at the daily K line, MU just delivered a massive statement. We closed at $428.17, up 2.59%. But the real story is the structure. We've officially reclaimed and held steady above the 5-day moving average. Check the YM, as we are seeing a bullish curl as multiple moving averages are now turning upwards simultaneously. This move is backed by heavy volume expansion. This isn't a fake out, it's institutional accumulation. Switching to the intraday chart, the price action was incredibly resilient. Despite some early volatility, the bulls stepped in, using the VWAP orange line as a rock-solid floor. We finished the session right near the daily highs, showing zero exhaustion. When a stock closes at the top of its range on high volume, the momentum usually carries into the next session. Same to Google. A strong green bar. This isn't just a bounce. We've reclaimed MA5 with authority. After days of consolidation, we finally have a stacked close above that key momentum line, and the 5-day is now pivoting north. With volume confirming the move, Google has cleared the overhead noise. As long as we stay above the MA5, the path of least resistance is up. The indexes are still chopping around, very choppy action. We are not out of the woods yet. The danger is absolutely still there. But you have to look at the big picture, the big trend. On the large time frame, this is still a massive opportunity to find buy points. We are looking for early buy points. Right now, it is just a consolidation period, a choppy period, and during this chop, it is the perfect time to trade individual stocks. The absolute best time to pick the right stocks. You focus on individual names, you pick the massive winners, and you ignore the rest. Alright, this is Lineup Stocks. See you next time.